the economy is going to basically grind to a halt this year, and it's no longer going to work, and the old systems aren't going to work anymore. You can already see that with the debt bubble growing and growing and growing. I've been basically studying the future for 30 years, and this kind of the sundown era of the U.S. is basically coming, if you will. So it's all happening at the same time. 2025 is going to be the best year ever for gold and the miners. I think it's going to be stunning because I think there's going to be so much money that comes into gold and silver in 2025 as the U.S. Debt problem really gets exposed. There's really only one reason to own gold and silver miners, and that's the U.S. basically economic system and debt bubble, and debt on the U.S. government's balance sheet. Because if that's untenable, and I think it is, then at some point the price of gold is going to go absolutely bonkers. Those are your two tells. Those are the two stocks you want to watch. This is a red pill interview. I don't even know if I'm going to tweet this one out. It's such a red pill.
Hey guys, welcome to Capital Cosm. Today we have Don Durrett on the show making his maiden voyage. Don, thank you for coming on, my friend.
Thanks for having me on, Danny.
Hey Don, tell the audience who you are and what got you into investing. What was your journey up until this point, for those who may not know who you are?
I hate to tell the truth because it's kind of shocking, but I'll go ahead and I'll go all the way back to the beginning since you asked me what got me into this.
Yeah, your origin story.
I read a book in 1989, and it really jolted me awake, if you will. I mean, totally awake, mind-blowing event. It was in the spring of '89. And in that book, I basically realized that America was in its sunset period. It's basically the end of America as we knew it was going to happen in my lifetime. Now, it was really difficult to get the timing right. I didn't think it was going to happen in the next 10 years, and it turned out to be 35 years down the road. But what I found in 1989 is happening right now. And it was, the end of America's hegemony, end of its dominance. But if that was going to happen, it was going to have an economic downfall as well. So I knew at that point in time that I couldn't really invest in the stock market because I didn't know the timing. I didn't know when it was going to crash or what was going to happen. All I knew is that the demise of America was going to unfold over the next, 10, 20 years. I didn't think it was going to be 30. I thought it would happen within 20. So 1991, I bought a gold mutual fund because I thought, okay, what am I going to invest in? I had some money. My grandfather gave us some money. I had to invest in something. I was like, what do I do with this? Put it in cash? No, I'll tell you what, I'll just put it in a gold mutual fund because gold's going to go up. The miners are going to do okay. So all through the 90s, every month I would put money. So that started me in 91. So all through the 90s, every month I would put about $500 in this gold mutual fund. Just let it grow. And then in 2004, so I did that from 1991 to 2004, and I ended up investing about $50,000 over that 10-year period. And my cost basis is negative. I've gotten more dividends back than that 50,000. I still have the shares. I have 5,300 shares. It's the Franklin A Fund. And I've gotten back well over 50,000. So it turned out to be a pretty good investment, but that's what got me started. And then in 2004, I was running with a friend. We were jogging, and I told him, you should invest in gold or some gold miners. And he goes, I like silver. So I started to go, okay, let me see if I can buy a silver mutual fund. Well, there wasn't any. So I said, well, okay, I want to buy some silver miners. So in 2004, again, there was no ETFs. There was no silver miner mutual funds. Didn't happen in 2004. So I started started reading about it, and it became, from that point forward, from 2004 forward, I started buying juniors and buying miners. And that from 2004 to 2010, I was learning. So that was my focus, 100% gold and silver miners only, nothing else. And I ended up writing a book around 2010 after I learned, because there was nothing out there when I was trying to learn from 2004, 2005, in those early periods. There was nothing. There was no books. So when I learned, I decided, heck, I'll write a book. Nobody else has done it. So I wrote my book, which is basically a textbook that shows you how to understand how to invest in these gold and silver miners. So that's how I got started back in 1989.
Yeah. So you mentioned that book. What was the name of that book that you read?
Yeah, it's basically a metaphysical book, of course, esoteric knowledge, definitely not logical. I hesitate to bring it up because most people, they're not into esoteric knowledge per se. So I don't want to, I'm going to leave it out, if you will.
Gotcha. Yeah. No worries about that. So you mentioned you kind of see the handwriting on the wall when it came to the demise of American hegemony. What were some of those signs that you saw back then that you're seeing now that have come true?
Yeah, it's kind of across the board. So it's really esoteric knowledge. So I combine, I'm kind of like this perfect person. So I'm actually really interested in politics and economics and esoteric spirituality. I mean, it's a really strange combination, but that's what I like.
Books from Manly P. Hall and things like that.
Yeah, all types of, channeled material, very esoteric, Eastern religions, really deep stuff. For some reason, I understand this stuff. I think it's because I'm an old soul and I can pick it up and understand it really quickly. That's why I don't recommend the book, because most people, they won't really understand it. So for me, I grasp it. I mean, I just totally grasp and understand it. I started writing. I mean, I started reading stuff in 1989. I was already writing in 1990. I mean, that's how quickly I
Interesting.
Knowledge up. I mean, I understand it. I mean, most people, you could get told, when you get told with words, it doesn't really work that well. You have to experience it. And so for me, I was a very unique person that I could understand this stuff. It's like, like I said, I think it's a lot of it's from past lives, very esoteric. So I can combine what's happening with the world, how it's evolving, both spiritually and economically, in a really strange way. I can connect the dots, if you will. I've slowly, it's hard for me because, again, words don't work. So if I tell you right now why it's happening, what's happening to America right now, that's the reason why people don't see what's coming. I see it because they can't connect the dots spiritually. They don't think that there's a spiritual tone to this change, if you will. But what's happening socially and economically is also happening on a spiritual level. And it's hard for people to really connect that. This is really interesting. You kind of opened this up, but
yeah, go ahead.
I've been using gold and silver as a hobby, waiting for the world to awaken, which is strange. I've been waiting because I knew in the early 1990s kind of the truth. So the movie The Matrix is one of those ones where it basically shows that the people in the Matrix don't know that they're in the Matrix, kind of thing. And that's how our world is as well. People, we have amnesia. We don't know who we are. We don't know what this world is made of. But we are actually the generation that awakens, which is really, really strange. And we're on the precipice of it. It actually begins next year in 2025. So it's all been leading up to this pivot point where America basically has to find a new way. So our current social and economic structures are going to change. We have to reorganize because it no longer works. The economy is going to basically grind to a halt this year, and it's no longer going to work, and the old systems aren't going to work anymore. You can already see that with the debt bubble growing and growing and growing. And so we're going to have to go a new direction, and that's going to make people start to open up their minds a little bit and start thinking. So the big one here is this idea. And like I said, if I told people this over the last 20 years, they just roll their eyes. It's like, so what, Don? Doesn't mean anything to that doesn't mean anything, but it means everything when you grasp it. So this is it, is that we are literally souls in a human body. We are our energy, our consciousness didn't come from this planet, right? Our soul came into our body, right? So we think that our consciousness was created when we created our first breath. Well, that's total baloney, right? We were just, our consciousness became alive, but our consciousness did not originate here. That's the key. It didn't originate here is number one. And number two, it's not self-contained. And that's the biggie. And that's the one that people are going to start to recognize, is that so we do not, our consciousness, who we think that we are, is not self-contained. And once we start to think about it, think in this way, and it's going to start, we're going to start to recognize, and this is the thing that changes humanity, and it's going to happen over the next 10 years. We're the generation that awakens. So there's no separation. Since our consciousness is not self-contained, there's no separation between me and you. So in theory, we wouldn't need this technology to communicate. In theory, we should be able to communicate telepathically. In theory, if we consciously could connect, because we are connected consciously. So that's where telepathy comes from, is the truth, the fact that consciousness is not separated. There is no such thing as separation. And so that changes everything, because you can't have wars when you know you're connected to somebody. So we're literally all family. And that changes everything. And that's when so what's going to happen over the next 10 years is people start to awaken to this truth, is that we're going to start to work together, because we're going to recognize that we're literally connected to each other. So I've known this since the early 90s, and I know it's going to happen. So I've used gold and silver as like a hobby. I got to do something. I'm just going to sit around and wait, because what I just told you, the average person, it just goes over their head. They're like, so what, Don? Oh, we're not self-contained. What the hell does that mean? Right? It means nothing. And so trust me, in the next few years, it'll mean everything. So I've just been, hanging out in gold and silver, biding my time, if you will, waiting for the planet to awaken. And gold and silver is, it's a lot of fun. So.
Yeah, and you're not the only one that thinks this way. The CIA actually wrote a paper on this some 20 odd years ago over something called the Gateway Project, and they basically went over how the universe is actually holographic, in the sense that we're all connected in much the same way that you kind of described there. So there's something called entanglement of particles. So when particles at the very early stages, of the universe, i.e., the Big Bang, we're infinitesimally close to one another, but now they're spread across the universe in different, on different corners of the universe. What you do to one particle instantaneously travels, that information instantaneously travels to that other particle, meaning it's kind of, distance is kind of an illusion.
Exactly.
In that sense, it's much like your monitor screen. When one pixel changes on one end, and the other pixel changes on the other end, it's all coming from the same source, from your computer.
Right. So technology, and we're seeing this, right? Technology is speeding up. And so as technology speeds up, that consciousness stuff, it can't be hidden. It's like scientists, they just start to figure this stuff out.
And Tesla talked about this. He actually has a quote that once humanity and the scientists start looking at things in terms of energy, then we will make more progress in some small time frame than we've made in decades.
Yeah, everything's energy. Absolutely. Yes. And so we are the generation that awakens. And so we're getting really, really close. Like I said, I think it begins next year.
Interesting.
So,
well, hey, let's take it back, to ground, or maybe underground, when it comes to gold and gold mining. What is your general take on the gold market at the moment? Gold is kind of flirting with all-time highs now every other day. Oil has kind of seemed to have retraced back to this $82 level after hitting an $87, $80 premium. taking into account Middle Eastern risks there. But gold and silver are actually hanging in tight. Why is there a kind of a decoupling between gold and oil?
Well, I don't really think there is a decoupling
No.
between gold and oil. I actually think that oil, it got to about $90. It got really close. Now it backed off to 82. And I think the reason why gold went down today, $10, is because oil went down. I think they are somewhat connected. I think that oil and gold are both going to go up together. I think we saw that in the 2000s. Gold basically had a massive move from 2000 to 2012, and so did gold. They went together. I think they're going to go together again. I don't see that as a decoupling. But I want to circle back to what you originally said about, how we're seeing, gold and silver prices here breaking out. I think, why that's happening. And I really think that, Wall Street has it wrong. That Wall Street is basically saying that what's happening with gold is not relevant. It's not relevant because the market is strong and jobs are strong, the GDP is strong. So don't ignore that. Ignore that gold, right? I think that gold is really the signal and not the Wall Street, not the S&P 500, not the stock market. Now, people that have listened to me before know that I'm very, very bearish the economy because, kind of our intro, right? I'm basically saying that this is the end of America and this is the end of the economy. So we're basically a train going too fast around a corner and the train's going to fall off here. We're really, really close. This year, I think gold is really sniffing us out. And I think the trigger was really the Ukraine war. This has been leading up since the 1980s, but I don't want to go into history because people have heard me talk about, why it all started in the 80s with Reagan and the debt explosion. The debt bubble began in the 80s, and it's just been getting bigger and bigger and bigger. We've been living off of debt since the 1980s, and basically the bubble is popping right now. And where you can see that popping is really, really strongly correlated to both COVID and the Ukraine war. So this all started. And it actually started in 2016 when Trump came in and basically our political system broke and our media broke. That was kind of the clue that bad things were coming. And then in 2020, we had COVID. And then I think it was 21 or 2, I think it was 22, we had the Ukraine war. So the Ukraine war was really kind of the final trigger for the US. That's when the doom loop basically started for the US. Where we couldn't get out. We were trapped. And this is where Wall Street hasn't figured out this doom loop. So what happened with the Ukraine war is that's when the de-dollarization basically took it up a notch. De-dollarization was already happening prior to the war, but it went up a notch. So you had Russia and China basically creating this alliance. They are natural enemies. They always have been because they're fighting over the turf of Asia. Only one person can be the boss, basically. And so they're fighting over that. And now suddenly we brought them together, which was just the worst thing that could have happened for us. So now they are teaming up to create the global South. And in tandem with the global South, they're also bringing in the Middle East with Saudi Arabia and Iran, and I think Turkey next. So you take Saudi Arabia, Iran, and Turkey, and you align them with Russia and China, and then you give them India, and then you give them the global South with South Africa, and then even South America. I mean, it's just totally bad news for the US. And that's all in motion right now. That's all starting. Well, that's the doom loop. That's the background of the doom loop. And then the doom loop is our debt bubble, which has gotten out of control, right? We're actually adding $1 trillion of debt every quarter now. And that debt has to be borrowed. And at a certain point, it doesn't work anymore. And this is where the fiscal dominance, this is the doom loop, is really the fiscal dominance. So we have this really large government budget deficit in Washington. And that budget deficit, or the size of spending, if you will, can't go down, because the US can no longer afford to have a recession because of all the leverage. I mean, look at the banking system, for instance. So you have all this leverage, and if you go into a recession, things start to blow up. I call it going from bad to worse. And so they have to, if you will, maintain the spending on Washington. And if they maintain that spending, it creates this large budget deficit, and that's your fiscal dominance. So basically, high spending, the dominance to create economic growth. We would be in a recession here. This is the one thing that people don't really get, is that GDP would be negative right now if it wasn't for the deficit. So it's basically a Potemkin economy. It's a fake economy. The American economy is not growing on its own right now. It's growing on debt. But it's the end game because we're at the final stages where it's all blowing up. You can already see it. In October, we almost had an auction fail, and we're not even in a recession yet. So once we get into a recession, you can have foreigners basically say, I'm not touching that debt with a 10-foot pole, and I'm probably going to dump my own. So our two biggest bondholders is China and Japan. And China stopped buying about 10 years ago, if you go back and look at their holdings. And Japan is starting to sell. And I don't think Japan's going to buy anymore. So you have our two biggest buyers are now net sellers, not buyers. So who's going to pick up the slack? It's basically an end game, if you will. And I'm glad you let me bring in my earlier comments. You can see where, so I've been basically studying the future for 30 years. And this kind of the sundown era of the US is basically coming, if you will. So it's all happening at the same time, if you will. So there's no way out. I've been tweeting this on X that there's nothing the Fed can do to stop the recession, and there's nothing they will be able to do to restart the economy. So it's basically, the train falling off the track or the train hitting the wall. But before this year is over, the fear level in America will exceed 2008. And it was really high in 2008. There was an article today on Zero Hedge saying that basically the fear's coming out right now. And, so what happened was back in September, October of last year, we kind of dodged a bullet. The S&P got down to the 200-day moving average, about 4,200, and then it bounced. And it went from 4,200 almost to 5,300. So about a 1,000-point bounce. And everybody thought that, oh, we're fine, we're out of the woods. But in actuality, in my opinion, and I thought that was going to be the crash, but we got out of it, we bounced. There was enough liquidity to get out of it. But all that we did was buy some time. But this next one, I don't think we're going to dodge that bullet. I think once the selling begins here, and I did think it was going to be March, April, May. And so once the selling begins, I do not think, I think it's over. I remember last year, the all-time high, the S&P was 48.18, and I thought it would hold for the whole year. And then going in, once we bounced in October, I thought we're going to go, that 48.18 is out, we're going to take it out. And my target was 5,200, and we got above 52, but we never touched 53. And I think that high, I think it was about 52.80. I'm not sure the exact number. I think that's going to be our all-time high for this year.
Okay. So you mentioned that time has run out. Something has to give. Something's going to pop. But what about when you look at the past? When you look at something, let's say Weimar Republic. In the Weimar Republic, they had, as you well know, hyperinflation, but the stock market also went up. But in terms of real terms, it actually went down. So could something like that happen here, where the market keeps going up, up, and up, but through our deficit spending, through money printing, the dollar loses more and more value at a much more rapid pace?
So what I like to do is I like to put probabilities on possible scenarios. And I think that the hyperinflation scenario has a very low probability. And the reason why is because we're going to have a lot of deflation in assets, which you didn't have in the Weimar Republic. So the one thing that we saw, like for instance in Japan, so we're in an MMT, modern monetary theory, economic philosophy right now. This idea that debt doesn't matter, And so they're going to keep expanding the money supply. But simultaneous to that, you're going to have a lot of debt blow up. Corporate debt, personal household debt. You're going to see a lot of debt blow up. And so which is going to offset the money printing. And so, I mean, some people think we're going to have net deflation because the leverage is going to pop to such an extent. But I don't think we'll have net deflation. I think it'll be definitely net inflation. But it's not, I don't think we're going to get to 20%. I think hyperinflation is 2025. I don't think we'll get anywhere close to that. But I do think we will have inflation, between 5 and 10. I think we will have a resurgence in inflation, but I don't think it'll go nuts. I don't think it'll go crazy because the economy is going to hit a wall, so you're not going to have any demand out there. So if there's no demand, it's going to be really hard for them to raise their prices. If they raise their prices, there's going to be no buyers. And the other thing is that these companies are going to go broke if they raise their prices. So it's going to be hard. One of the things they'd love to do is pass it on to the consumer. Well, if the consumer's having trouble, they won't be able to pass it on. So I think the probability of hyperinflation is low, very low. I think what we're going to see is stagflation. I think the economy will just grind to a halt. You won't get any growth, and assets like stocks won't go up. Housing, I think, will go down. It won't go up. They always say this idea of cash is king, but if you're holding on to cash and you have 5% inflation, if you're losing 5% a year, that's ugly, right? So cash is somewhat king, but really what's king is going to be gold, because gold is going to go up. Gold's going to outperform cash. So I'm much more in the commodities. I think commodities will go up. And again, I think assets will get hit really, really hard, which will go down, which will have that offsetting deflationary impact to the money printing. Now, let me go back to the money printing. I don't think that the Fed will be able to monetize all of the debt that's necessary for the U.S. government. So what's going to happen is the Fed, you'll have they'll start borrowing over $100 billion a month. And so the first couple, and then once the recession starts, and what's going to happen is the foreigners are going to disappear, but not only the foreigners are going to disappear, but the retail crowd's going to disappear too. They're like, I don't want any of those bonds either. The federal government's going broke. That's a bad play. In other words, U.S. Treasuries are going to become a risk asset. Nobody's going to want to touch them. It's going to be a hot potato. And so once that scenario unfolds, the Fed is going to have to step in and buy these bonds at the auction. Well, guess what? Once you have 1, 2, 3 of these auctions where the Fed's buying 80% of them, that's game over. Because at that point, you're getting hyperinflation because all that money is basically flooding into the economy. It's all printed money. So your money supply is going to be growing and you're going to start to create inflation. And they're going to know really, really quickly, they're going to run the numbers and go, we can't keep doing this. We keep doing this, then we will get hyperinflation. So at that point, they have to pull the plug because they're going to know. That's when you get your reset. And they're going to know if we just keep doing this, we're going to get hyperinflation. It's inevitable. There's no way out of this. It's the ultimate doom loop, right? And so that's the reason why you don't get hyperinflation, because the Fed will pull the plug and do the reset. And so I think the reset's in 2027, but it could come as early as 2026. And the reset's going to be really nasty because dollars are going to get devalued. And so if you own values, and not only will they get, but you'll get instant inflation as well. So the commodities will go up probably. They will go up because the dollar will go down. And gold will be more tied to oil, for instance. So when you get it's kind of like instant hyperinflation to a certain extent. When you get devalued, 30%, that instantaneousness, your net wealth or your net worth is going to go down. So people that are sitting on cash are going to really get hammered. It's like instantly you lose 30% of your money overnight. That's why the people that hide in gold are going to benefit.
So what about the offshore dollars? All of these countries and institutions offshore that have USD denominated debt, what happens to them?
Well, what I think is going to happen, again, there's a few scenarios, absolutely. But what I think is going to happen is they're going to create a new dollar. That's what the reset's going to do. And they're basically going to orphan all that money. I don't know how long they're going to give them the opportunity to move the dollars back into the US, but I'll bet it's a very short period of time, like 30 days. You got 30 days to bring your dollars back to the US, bring them back home. After that, the new dollar comes out and you're screwed. And so I think they're going to orphan them and they're going to create a multi-dollar system. So the euro dollar is going to be the old dollar. And there's not going to be any money printer for that. And so it'll die off fairly quickly. And they'll come up with it'll be interesting to see what happens in that scenario. But that's what I think is going to happen. I think the old dollar will get orphaned internationally and they'll create a new dollar internally, which will be the CBDC, by the way. It'll be the digital dollar. That'll be their opening. That'll be their way to create it. And we have a crisis here. We don't have any choice. We're going digital. We're creating a new currency, and they'll just push it on us. That's what I expect.
Why do you think the Fed has been pushing back on the concept of a CBDC? You've heard Jerome Powell and various other members of the Federal Reserve who have spoken out against any talk of implementing a CBDC. Which goes in contradiction to the folks over in the ECB who are very in that camp.
I think part of it has to do with timing. I think political expediency. I think they recognize that it's not doable today. So I think it's more political expediency. I think they know it's going to happen, but it's not going to happen this year. So why talk it up? If it's not going to happen anytime soon, then let's just talk it down. But I do think they know it's coming, and I think that's all it is. It's just politics. It's not as that they don't want it. It's that the American people won't accept it today.
It's their way of neutralizing attention from it.
Yeah. It's just we don't need to talk about it, kind of thing. It's not going to happen. So I think that's more of the talk. But it's coming. It's a matter of when. Because the reason why it's coming is because it is so beneficial for the government. It's not beneficial for us, but it is so beneficial for them. Mm-hmm. They eliminate the black market. That's huge. But simultaneous to that, they also maintain visual of all the transactions. Now they can follow the money trail. And they love that. The government they just love oversight. It's their favorite thing. So if they can monitor our personal transactions, they're going to do it. But the one thing where they're going to have trouble, of course, is going to be crypto. They're going to have a hard time. So I don't know, when the CBDC comes out, there's definitely going to be some regulations in crypto. They're going to go hand in hand because crypto is basically going to bypass what they're trying to accomplish. So that's nasty. I don't know how that's all going to unfold, but I think that's one of the reasons why the SEC is really having a hard time here with Ethereum, because Ethereum is kind of Bitcoin is one thing, but all the other alts are a whole different animal. Once they bring Ethereum in, that kind of opens the door to all the alts, and then how do they control that genie?
Yeah, but isn't the custodian behind the Bitcoin ETF BlackRock? And they're deeply tied into like all of these world organizations?
Yeah. Well, I think that's one of the reasons why the ETFs got approved, because the custodians are all basically on these exchanges, so they can monitor the custodians. But it gets much more difficult for the alts, because a lot of the alts are maintained on, they do swaps. They're all done on these wallets. They're not done on the exchanges. And so that's the problem. I think that's why the Ethereum ETF hasn't been approved yet. I think they're paranoid about letting that genie out of the bottle, but we'll see how that all unfolds.
What do you think about this theory about crypto, or Bitcoin more specifically, being a means to siphon away demand from gold as a safe haven asset? Have you heard about this?
Oh, absolutely. It's basically a false narrative, if you will. If you think that that was the reason why, Bitcoin was created, to basically pull gold down, or that's why the ETFs were created, to pull gold down. No, no, no. There's plenty of money for both. We have well over $200 trillion in global assets. So there's plenty of money when just the bond market alone. I mean, well, let's just combine them. The bond market and the stock markets, those two together. If they both have problems, that money is going to flow into both gold and Bitcoin, both. So you're not, you're not going to
and gold's like a $16 trillion market cap asset compared to Bitcoin, which is just about $1 trillion, or maybe a little over $1 trillion.
Yeah, a little over. Yeah, So 15 trillion there. But you really have to take that gold market down. That 14 trillion includes all the jewelry, which is 75%. It's really about 4 trillion. The amount of the gold, we really only want to count the bullion and the coins, and some of the jewelry. Now they talk about how, and it's jewelry and artwork both. So I mean, I get the fact that a lot of the jewelry can be converted. They can melt it down or whatever. But I think a big, more than half of the gold market cap will never be, transacted, if you will. So it's more about, 4 to 6, maybe 5 to 6 trillion gold market cap versus Bitcoin's 1. So that's the way I look at it, as far as, actual market, if you will, bullion and coins.
Gotcha. So we've talked about gold, being if you want to take into account this $15 trillion market cap, I mean, you're seeing $30 moves in a single day, which is like equivalent to almost over $100 billion in money sloshing in and out. It's definitely not retail investors buying it up from Costco, which is responsible for about $200 million in sales a month now. But what about silver? What's silver's role in this currency reset that you see?
Well, before we talk about silver, I want to talk about the big gold moves, right? So this started right around March 20th, and it started in Shanghai, and it started on Sunday nights. So Sunday night, you'd have this $50 move in Shanghai. And then the Chinese, they would and then the next night, they would just keep buying it, just keep going up, 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 up. I mean, if you look at the Shanghai, it was only this week that it kind of stopped going up. I mean, it went up straight up for 3 weeks. If you look at the Shanghai exchange. Now, what would happen is it would trade up in Shanghai, and then at night, and then during the day, it would trade down in New York. And then it would resume back up in Shanghai. And there was this fight between the East and the West. But it was totally evident to me that the Shanghai market was what was driving this thing from 2100 to 2300. The breakout was at 2100. It kind of started at 1900, and it's been on a roll since 1900 all the way up to 2350, 2400 really. But the big move, the breakout, occurred in Shanghai, in my opinion. Now, the central banks have been buying all year and last year, right? It's not as if the central banks all of a sudden started buying here the last week of March and early April. No. It wasn't the central banks that made this $250 move. Central banks have been ongoing. The outlier was Shanghai. That's the thing that basically zipped up. That was a $50 moves every week. And a lot of those moves were like Sunday night. You get a $50 move on Sunday night, and then they would hold it the whole week. And then the next Sunday, they pop it up another $50. For some reason, the Shanghai exchange, it has these big moves on Sunday nights. I don't know why. It's weird. It's like it's like Chinese go away for the weekend, and they have a lot of fun, and there's like Sunday and Monday morning, they get up and let's go buy some more gold. Sunday night our time, Monday morning their time, but they just love to buy gold on Monday mornings. I don't know what it is, but that has been the focal point of it. Now, why is it happening? We'll get to silver, but why is Shanghai buying gold, and why did Shanghai push up gold $300 in 3 weeks? And I really feel that it's really tied strongly to the Ukraine war and the global South, and basically China's division with the U.S. I think it's all connected here. And the Chinese have finally decided to basically put the hammer down and say, okay, this is it. Let's make our move. Because as the price of gold goes up, it creates all kinds of problems for the U.S. It basically puts pressure on the dollar, and it puts pressure on the U.S. economy because, trust me, Wall Street doesn't want to see gold up high because that's a psychological point where people think, wait a minute here, something's wrong, something's broken. There's something happening here. And I just think that this is a movement. I think we're going to look back, say by the time we get to June. So we got, 2 more weeks here in April and, a month. So about 6 weeks from now, I think we're going to get to June and we're going to look back and we're going to basically see that was a very pivotal point, if you will, and not a good one. A pivotal point in the wrong direction for the U.S. because basically gold and oil, Luke Groman talks about this, and I just think this guy's been on top of it. He's basically been talking about how gold and oil are basically starting to replace the dollar as, determining, how things are priced in, how we're pricing things, if you will. That's why I pushed back on you on this decoupling, because I think oil and gold are going higher and they're connected. And so it's like what Luke says is that how much oil can I buy with gold? Not how many dollars I can buy, how many barrels of oil can I buy with gold versus how many barrels I can buy with dollars. I can buy more oil with gold. And so if that's the case, then the Chinese want to own gold. And then they want to connect the yuan to commodities. And so they want to start buying commodities with the yuan. And so the dollar is losing its grip on pricing in commodities, which is bad for us. So we're losing control over there. Now let's go back to silver. So I call gold big brother and silver little sis. So little brother is the masculine. So gold's the masculine. In astrology, gold is the sun, the Leo sign, and silver is the moon, which is Cancer. So the moon, the shiny silver moon, it's feminine. It
reflects off the sun.
Yeah, so silver's the feminine, which you can't understand, you can't control. Gold is much more, conservative, and we understand it's powerful. It's always going to be worth something. Silver is you can't understand the thing, right? It's very feminine energy. So I always say that gold's going to lead, big brother's going to lead, and then little sis, which is silver, she's going to wait. She's going to hang back behind big brother and then wait until the coast is clear. And then she's going to put on her running shoes and basically come running past him once everything's safe, if you will. So little sis, and I said that once we got above $26, that she would probably put her running shoes on. And sure enough, as soon as she got above 26, she went to almost 30. She went from 26 to 29.80. Got really close. She put them on and then she backed off. But I think her running shoes are still on. So little sis is going to follow her big brother, but she is going to be the signal. She is going to be, that's the tell, if you will. Once she basically breaks out in a big way, this is a big, bull market rally. So we've been in a correction since August of 2020. So in August of 2020, the HUI, which is the miners index, was at 360. So in order for this bull market to resume, we got HUI has to get above 360. Well, guess what? It's under 260 right now. Today it was at 258. I mean, 250 is the neutral zone. This thing's barely above neutral. So the miners have just been doing nothing. They've been doing squat. And the reason why is because we're in a risk-on trade on Wall Street. But what I've been talking about throughout this interview is that it's getting ready to flip to risk off because people are going to get nervous and fear is going to go up. And once that happens, little sis is going to run to 32. Once she gets to 32, she'll run to 35. But little sis, when she puts on her running shoes, she doesn't mess around, man. she goes up fast. You can see 25% moves in a week. So silver is she's got her shoes on right now. I do not think I turned bullish 2 weeks ago. when silver broke out. So gold was off and running. Gold had 2 weeks in a row, and then silver broke out. And I said, that's it. So once she put on her running shoes, I became bullish because I don't think that this 3.5 year correction will continue now. I think it's inevitable that we break out. It's inevitable that HUI gets above 360 here. So I think right now what's going to happen is that silver, the floor, I always try to find the floors in gold and silver. So what are the floors? I think the floor in gold is 1900 to 2000, and it might be 2100. So I think the floor in gold is 1900 to 2100, somewhere in there. And I think the floor in silver has risen to 24 to 26. And so we don't have to worry anymore about these big, deep drawdowns. I mean, we were at 22 in silver not that long ago. A couple of months ago, we were 22. So the floors jumped $2 in silver in a very short period of time. And if we get to 32 in silver, I think the floor will jump all the way to 28, which is amazing. That means the floor jumped $6 in only a few months, but we got to get to 32 first. I did a poll on Twitter, and I said, what do you guys expect next, 32 or 26? And 32 won by a pretty good margin because most people are optimistic. Now, I said 26. I think it's about a 50-50 shot if we go to 26 or 32. I voted 26, but I don't think we're going below 26. And now, again, I have to see the floor at 24 to 26, but I think 26 might hold here, and I think 2100 might hold on gold. In other words, the big, deep corrections, I think, are over. We're going higher. I think we're going to end this year, north of 400 on the HUI is my expectation. I don't know if we'll get to 500, but I think we'll end 400 to 500, which will be a really good return for people that are riding this train. And I think 2025 is going to be the best year ever for gold and the miners. I think it's going to be stunning because I think there's going to be so much money that comes into gold and silver in 2025 as the U.S. Debt problem really gets exposed.
So I want to hone in on what you just said about the miners a few minutes ago there, them being a risk off trade. Do you think that it's also because the vast majority of the miners just are simply like a lottery ticket? Let's say there's only the vast majority of the miners aren't really producing much of anything, are they? So it's really like a slim minority that's kind of propping up the mining sector, right?
Yeah, there's in my database, I have about 850 names, and it excludes about 200, maybe 250. So you could say there's about 1,100 gold and silver mining companies out there that trade on exchanges. And so I have about 850. So the ones that I'm excluding are the small, really tiny market caps, under 10 million US. There's probably about 200 of these tiny companies. And so of the producers, there's only about 120 of them. And of those, not maybe 125, somewhere in there. And of those, there's only about 80 of them that are, fairly decent with decent balance sheet. You got about 80 companies propping up the whole thing. But then you have some companies that are near-term producers that are valuable because they're heading to production. And there's probably about 10 of those names. So maybe there's 90 companies propping up the whole thing. But the one thing about gold and silver miners that makes them so unique, and I always have trouble with, I post on Seeking Alpha. I posted an article Sunday. They still haven't posted it yet because it just makes them so uncomfortable. And when I publish these articles, because they can't wrap their head around it because they don't understand how gold and silver miners work. And the way that it works is the gold and silver price have this massive. One second here. It has this gold and silver price has this massive impact on the value of these companies and on their profitability, and they don't have any control over it. So you have this industry. A good example is like silver miners. I mean, they have no control over the price of silver, but yet their whole business model is based on the price of silver, the revenue, right? So they've been, you start a company and you're just praying. You're literally praying that the price of silver is high enough that you make a profit, right? It's a crazy business. And so since it's such a crazy business, I believe that you can't really do it in the short term. It's just too much risk, too much volatility because you don't know what's going to happen. So, and it's basically speculating. You're speculating that the price of gold and silver go up. That's it. It's the bottom line. So all you're doing is trying to identify companies that you think are going to benefit the most if that happens. Now, what drives the price of gold and silver up, right? And in my opinion, there's really only one reason to own gold and silver miners, and that's the U.S. basically economic system and debt bubble, and debt on the U.S. government's balance sheet. Because if that's untenable, and I think it is, then at some point the price of gold is going to go absolutely bonkers. And so all you're doing is betting on that. You're basically betting on the U.S. economy doing what it's really currently doing. It's basically hitting a wall, and then all that leverage comes home to roost, and people want to run to these risk-off assets because gold is the ultimate risk-off asset. And so gold and silver miners, the irony of it all, are kind of risky, but they're risk-off bets because they benefit from gold so much that they become risk-off plays, which is bizarre, but that's how it works. In the 1930s, which was a totally risk-off environment, one of the best plays was homestake mining. Homestake mining, right? It was a gold miner. That was the ultimate risk-off play. And so that is what's coming back. And everything goes in cycles. So we had a 10-year run from 1971 to 1980. And that was a risk-off period because of inflation. And gold miners did great. Then from 2001 to 2012, gold miners did great because it was a risk-off period because of the dot-com bubble, 9/11, and the Great Financial Crisis. Those three things all created risk-off. So now, in this decade, the risk-off is getting ready to begin. And so we're going back to that same type of atmosphere that we had in the 70s and in the first decade of this right now, where we're going back to risk off. And once that risk off kicks in, the miners will go up. So right now the miners are like stuck because we're in risk on, like, we don't care. Wall Street, I mean, all I have to do is, I'll give you the other tell. The two tells is Newmont and Hecla. Just watch those two stocks. If those two stocks do well, the entire sector will do well. So Newmont, I mean, it really isn't doing a whole lot. And so it should be about $60 right now, and it's like 38. So maybe it got to 39 today, but it's way undervalued what it should be at versus the price of gold. And so once Newmont gets, north of 50, that'll basically be an indicator that the miners are starting to run. And then Hecla is the same with silver. It'll do the exact same thing as Newmont. Those are your two tells. Those are the two stocks you want to watch. If you want to watch the HUI, the HUI, and the Newmont and Hecla, those three will tell you exactly what's happening.
Okay, so we talked about the collapse. We talked about the currency reset. How do people actually prepare for something like this? Holistically speaking, aside from owning gold and silver, what else should people have top of mind for what's to come?
Yeah, I actually write about this. So I have a book called The Path Forward. So if you really want to get prepped up and get ready, now it doesn't have anything about prepping, but it's all about your mindset on how you have to think. So the first thing you have to recognize is that the future is not going to be anything like the past. So you have to be very agile, and you have to be very agile, especially with your finances. So like people that are in 401ks right now are going to get hit really hard because most people have 401ks. They're in the stock market. The stock market's been doing great. So, I'm sure very few people, small percentage of people are not in the stock market. So, the vast majority of people, 401k plans are going to get hit pretty hard. So they're going to have to pivot and figure it out and become very agile. And, gold and silver, I always said you should stack at least 1,000 ounces of silver And, that's a starting point. And then if you can stack some gold as well, but it's harder to stack gold because, $2,000 a pop is not easy on gold, but it's easy to stack silver. So you should do that. And then you have to be very agile on the feet. But the other thing that you have to really recognize, I think one of the things that you really need to do for preparation, one thing is your health. And people really take this for granted, but it's actually going to become more important as we go forward to stay healthy. So you have to basically start to clean up your diet in a big way and start, focusing on putting good nutrition in your body to stay healthy. I'm telling you, it's going to be bizarre. People are going to start growing their own food, but health is going to be a big thing. And the other one is be ready to change. Don't expect your old lifestyle to work. You have to be very adaptive because things are going to really get really weird. And so if you don't get angry, like, something changed, this happened, I gotta pivot here. You need to be very open-minded to every day your life's going to change a little bit more. And don't get angry, oh, my life's going to hell because my old lifestyle is not working anymore. I got to do this. I can't do that anymore. I got to do this. But a lot of people are going to get really frustrated because they're going to try to hang on to their lifestyle and they're going to get very angry when it doesn't work anymore.
You have to be adaptive.
So you have to be very adaptive and be prepared to basically change. And it's like, oh, this is just the direction we're going in. This is the new way. And not, like I said, get super angry that your life doesn't work anymore because it's not going to work anymore. The good news is that this decade is going to be ugly. It's going to be a mess because this is the decade that it all basically breaks down. But next decade, that's when we go in a new direction. That's when things change. We're like, oh, cool. I like this. So the change next decade we'll like the changes. This decade we won't.
Is that kind of following the fourth turning model where we're in a fourth turning now? We kind of go through this period of turmoil and then we reset to a first turning.
Yeah, right. But what people don't have right in the fourth turning and what people have wrong, and this is the thing that's going to be real shocking to people, is they think that this is a business cycle and that we're just going to transition. We're just going to go forward. In other words, America's just going to get better and better. So that's how people are think the fourth turning is like, okay, we go through this period, like a depression, if you will, and then we get back on our feet and go higher, right? That's not what's going to happen here. We're not going higher. We're going different. And so and where we're going different is not what we expect. For instance, by the time we get to 2030, I would bet that 30%, which is a huge number, are probably will eat some food that's grown locally, which that's not how it is today. And so it's going to get really, really strange. It's not going to be. It's again, people say fourth turning or business cycles, things are going to get better. No, this is the end of the U.S. era, the American era. And now we go. I'll use the term different. We go different now. We reorg in a different way, but it's not going to be a step up. It's going to be a step sideways. So it's not what, like I said, it's not what people expect.
Yeah. Interesting times. Well, hey, Don, before we sign off, any closing comments to the audience?
We got in some really deep topics here, really, really, really deep. I mean, this is a red pill interview. I don't even know if I'm going to tweet this one out. It's such a red pill. But yeah, the one thing that I would say is that buckle up because this year is going to be as chaotic as 2020 was, if you can believe that. And so it's like, read a lot, prepare, do a lot of reading. I would say do some research on crypto. A lot of people are ignoring crypto, thinking it's going to die. Crypto is going to be a really good space, if you will, to make money. Because there's just going to be a lot of opportunities, I think, in crypto. And I think a lot of people are going to ignore crypto until it's too late. But, once Bitcoin gets above six figures, I think all the alts not all, but a lot of the strong alts are going to do really well. So I would say do some research in crypto and don't ignore it. because a lot of people are going to ignore crypto. Now, that said, we don't know if crypto is going to work. It is speculative. It's just like gold and silver mining stocks. It's all speculative, absolutely. But I think the risk reward probably works. It's just something I just don't see Bitcoin going away, and I don't see the alts going away. So I bring that up. I see that as an opportunity. So I mentioned that because there's not going to be a lot of opportunities, if you will, as the economy basically hits a wall. So I'll leave it at that. But thanks for having me on, Danny.
Yeah, and where can people find you? I see goldstockdata.com. Anywhere else you wanna plug?
Yeah, Twitter. You can just search for Don Durrett if you want to follow me on Twitter, and then Seeking Alpha, and then I'm also on Substack. Those are kind of my four.
Excellent. Well, hey, if you enjoyed this content, be sure to give it a like, comment down below. There's plenty of stuff to talk about. Let me know what you think of the interview. Super stoked to discuss this with you guys. And subscribe to the channel so we can keep getting more guests like Don. And with that said, you guys, I will see you in the next episode. Bye, y'all.